Good evening, everyone, and thank you for joining us. Welcome to the first day of the Smart Protein Summit 2021. We're incredibly excited about this next session. We've seen tremendous momentum in investment globally, with $3.1 billion invested across all three categories of smart protein in 2020. And that total has already been dwarfed through the first 3 quarters of 2021. But of course, as we've seen, the Indian sector is just beginning to take off. As we navigate this exciting time, we need to think about how capital and business advisory support from investors can support the growth of the ecosystem across the landscape and at various stages of companies' life cycles. With that, let me introduce you to our panel this evening. We have Mark Khan, Managing Partner at Omnivore. Omnivore pioneered agtech investing in India and currently manages $13 million across 2 funds. Previously, Mark was Executive Vice President at Godrej Agrovet, one of India's foremost agri-business companies. We have Starleen Sharma, co-founder and managing partner at Green Artha, a climate-focused innovation firm and investment fund. She's also the founder of Clean Tech Women's Innovation Network, climate editor for Business India, and mentor for Climate Launchpad, Sangam Ventures, and the Powered Accelerator. We have Ritu Verma, co-founder and managing partner at Ankur Capital, an early-stage fund that focuses on technology innovations for the next billion, with a large focus on agtech and food. Previously, Ritu has played different roles at Philips and Unilever across the globe, bringing new innovations to the market. We have Rajiv Chitrabhanu, who served as the CEO of JM Morgan Stanley, where he sat on the Asia Strategy Committee, leading it to over $1 billion market cap. Additionally, he served on the board of a number of global private equity funds. He's recently left to set up an investment and advisory firm called Magnetic. Through Magnetic, Rajiv advises and invests in technologically disruptive sectors, including consumer, health, food tech focused businesses. And finally, we have Vipul Patel, partner, seed and acceleration at CICO, the Innovation Continuum, India's foremost entrepreneurship center housed at IIM Ahmedabad. He's also an investment professional at Bharat Innovation Fund by CIIE, which invests early in the life of a company at seed or Series A stage and remains deeply engaged throughout the lifetime of the company. Welcome, everyone, and thank you so much for joining us this evening. With that, I think we should get right into it. First, a round of questions about what each of you do and your interest in the smart protein space. Vipul, we'll start with you. At CICO, you've built a thriving ecosystem of support for entrepreneurs, including in agtech. Would you be able to share more about this work and what specifically excites you about smart protein? Vipul, you're on mute. Thank you.
Sorry. Yeah. Thanks, Nicole, and good evening to everyone. So I am Vipul. I represent an organization called CICO. We started our journey long back as an incubator, but today we do a lot of work around incubation, acceleration. We also have our own seed fund and our early stage fund as well. So, and that's why we call ourselves as the Innovation Continuum. Starting from very early stage company, from MVP to early growth, that's the whole spectrum we operate, and putting very small checks like around 25 to 30 lakhs to up to a $5 million. That's the whole range we operate as an organization. Till date, we have accelerated more than 1,000 plus startups through a different program across the sectors and provided the financial support to the more than 500 plus companies. Out of that, there are 200 plus equity investment across the different sector altogether. And through our venture fund, we are managing almost $70 to $75 million. That's set under management right now. And we basically operate as an organization under the 2 themes. One is basically a deeptech and second is basically inclusion. So all our work in a different subsectors are basically primary come under this 2 thematic part. In terms of basically a smart protein as a sector, we started basically going more interest in last 2 years where We also engage with GFI, doing some of the early stage work around like working with the challenge part of it, as well as like coming with some resources around basically publication on what happening in the space. What as an organization we believe that this is a basically as globally this sector has picked very well, and at the same time in India also there are a lot of people who have shown interest either from a startup perspective as well as investor community. But at the same time, this is very nascent stage in India. We required a lot of basically uh, capital as well as other resources to for our early stage to build this ecosystem. This is a very tough sector, especially the assumption validation cost, which basically entrepreneur required early stage capital to validate their assumption. It's a high. So that the same time, I think we required a lot of basically might be catalytic capital, which is basically coming either from of the grant or might be some of the early stage, early equity form. That's a basically a requirement as of now. And over the period, I think if we put a lot of effort nurturing some of the early stage innovation, putting or bringing a lot of resources at an early stage, I think we can actually flourish these sectors, and then might be we can able to identify some specific might be you can say a good basically a companies coming out from the India also. But at the same time, yes, there is a lot of ecosystem related work required, and as an organization we already have a couple of companies working in this space at a seed stage, or you can say MVP stage companies. But we are also look forward to might be creating a very specific programs to support early stage companies and contributing to the ecosystem at large.
Thanks for that, Vipul. It's been great partnering with CICO over the last couple of years. Mark, we'll move to you. Speaking of agritech, we've spoken numerous times about how when you got started, there really wasn't a sector to speak of, so to say. And now agritech is seeing huge momentum. What are you hoping to do similarly in Smart Protein?
Look, I think that there are certainly similarities between what was agritech 10 or 11 years ago and what Smart Protein is today. There's a fairly incomplete ecosystem. There are very, very few investors. I think the only real investors that currently exist for the most part in Smart Protein are largely kind of consumer investors. There's very, very little investment in kind of the deep tech and in the biotech. To their credit, that's what Ankur has done with String, which is an awesome company. I think there's a lot of work that has to be done to build this ecosystem, to get very early capital into it, to get mentors, to get, in this case, quite a bit of facilities and hardware to really be able to pull off what these companies need to do from an innovation perspective. And I think in some ways it's even harder than agritech. If you think about a lot of the agritech takeoff, it's just largely the digital stack going from urban India into rural India and then being built upon, right? Like I always say, it's kind of 4G smartphones and UPI and more or less the India stack. That's not what we have here. Like what's required to make Smart Protein work is actually an even bigger lift. It's something that we're excited about. It's something that we want to be part of. But there's a talent challenge in the life sciences. There's a lack of facilities. There is getting products to market. There are consumer challenges. There's the fact that the timelines for innovation here are not the digital minimum viable product, iterate, A/B test kind of approaches, right? It's science. And so our sense is that this is harder, but we're looking forward to being part of making this a reality. And it's a space that we think is very important.
Thank you for that. And we'll dive into some of those topics that you mentioned later on the conversation as well. Ritu with Ankur Capital focuses on investing in transformative technologies for the next billion, like Mark mentioned, with string and precision fermentation. How does smart food protein fit into your investing thesis?
Thanks, Nicole. I mean, we've been investing in agri and food for a long time. And similarly, as Mark, before the word agritech sort of showed up. And I think if you've been investing in that space for a while, there are a couple of things that just hit you, right? So while we've had this sort of digital revolution, and which is super important for ag in India, don't get me wrong. I think that the next level of change and the impact of climate, the impact of actual fundamental technology, transforming what's happening is very critical if these chains, to reach the next level in these chains. And so that just hits you straight up. So smart protein is one aspect of it. I think there is a lot more, which I would call deep science-led innovations that are necessary in this space. The wins for that are there, right? So we all know there's climate change. We're coming off COP26. Uh, you know, we've all seen farms and, lack of rain or excess rain or cyclones or whatever else that's sort of happening. And we all know that, the way we eat today is not sustainable, right? So I think the two shifts are globally that we do recognize these things are happening, and protein is one of the contributors to this, and protein is one of the first movements that have sort of started in this. But I think the broader palette here is the fact that science has a huge role to play. Protein is one significant part of it. There are other parts of it also in the Indian context. So for us, smart protein is a no-brainer. To invest in that and to invest in some of the, especially the deep science stuff behind it, um, makes complete sense. And I will add to that there is another piece of change. I don't think we talk about that often. I know Varun and I have spoken about this a couple of times. That you know, uh, Food trade is changing, right? So where food is grown and where it's going to be sent, or where it is manufactured and where it's going to be sent, is changing. So while the smart protein in India might be, from a consumer level, not where it is, uh, the other markets that are asking for this, represent an opportunity for a lot of this to happen in India and be suppliers to these markets. So, I think that's another opportunity that makes smart protein in India actually a very exciting opportunity. So we're all behind it.
Yeah, and couldn't agree more. Starlene, we'll move to you quickly. You're doing some excellent work bringing together climate-focused investors at the Climate Capital Network. Would you tell us more about how momentum for broader climate-focused themes are increasing, and how this area of smart protein could form a pillar within that whole?
Certainly. I think all you have to do is pick up the newspaper to see that there's a dramatic shift in the types of capital and the availability of capital starting to come into the market. We're seeing both that there are new funds coming in, but beyond the new funds coming in, we're seeing a lot of the investors that have been active in different parts of the investment ecosystem in India are now looking at climate, either adding a climate lens or adding a full climate mandate. And that's really exciting. We still see that there's some gaps in terms of where that, how that looks in terms of a continuum of capital. But when we think about how smart protein could fit into it all, we do think that it's actually quite a positive phenomenon, in part because on one side, we have a number of impact investors who are very concerned and interested in food security, livelihoods, ensuring climate resilience. And smart protein has a really significant piece to play there in terms of the way that we're using land and resources. On the flip side, with the commercial investors, it's very much that there's an interest in is this a market that's going to make sense? And when we look at what has made meaningful climate investments in the past in India and how markets are evolving globally, we see very early interest in electricity and electric vehicles, largely in part because consumers are able to substitute these in with very minimal change to how they experience product, or they see the alternative as being better. And I think that we're increasingly seeing that with alternative proteins as well. And just as an example of that, on one hand, we do have a significant interest in trends around vegetarianism and veganism globally. But the flip side is that this summer, I was at a 4th of July barbecue in the US, and we literally did a taste test of Impossible Burgers, Beyond Burgers, and regular burgers. And hands down, even amongst like the meatitarians, if you will, it was the vegetarian burgers that were most favored. And so when you're seeing that ready substitution, as well as some of the other market factors, I think that there's an opportunity that a lot of investors would potentially be open to.
Yep. I think we agree. I think what we've been saying for a really long time is taste is really king. And when it comes down to it, that's what it's going to depend on, taste and price, really. With that, Rajiv, you were one of the first investors and, of course, a key business advisor in some hugely disruptive companies like Nazara Technologies and Lenskart, taking dozens of companies beyond these as well through stages to eventually go public. Why are you bringing your expertise and network to Smart Protein?
Yeah, thank you. Thank you for having me. I think it's a no-brainer question. Again, look for white spaces, look for big opportunities, and if you look at India's meat consumption, around 5 million tons per year, that comes to around, I think, 5 kgs per year of consumption as compared to 33 kgs globally. If you look at India, we never went through a mall boom. We straight went online. We never went through a telecom boom. We didn't even go through a voice boom, but we straight went to data. Why can't the same thing happen in meat? I mean, if people expect India to be the second largest consumer of meat, why can't we nibble away a little bit on that? And why can't India become an alt meat opportunity for people? I think that's one big theme that I see. I think there are two ways to play that, and we'll talk a little bit about that, whether it's a consumption direct, a D2C play, or is it an infrastructure play coming out of India? But the second big driver, I think, is broken down into population, climate, urbanization, and the shift towards nutrition. And if you look at population, you see 10 billion people by the year 2050. That's the estimates that we're talking about. And that's obviously going to boost and put a lot of pressure on agricultural demand. And with the global GDP rates going up, and you see people moving from low-income groups to middle-income groups, we've always seen a dietary transition towards a higher proteins, fruits, and vegetables, and a shift away from pulses and cereals. And that requires a commensurate shift in output and pressure on natural resources. So I think there's going to be a huge opportunity coming out of these drivers, besides obviously the climate and the whole nutrition movement that's happening. So I think that these are things that are exciting me. And the same kind of playbook, I think, may be applicable, things that I've seen in gaming, and I've seen that in e-commerce. I've seen the same thing in domestic D2C spaces where billion-dollar companies have been created. I think that over the next couple of years, some of that experiences, some of those learnings may be helpful to some of the companies. So I guess that's my motivation.
Couldn't agree more, and we're glad to have you as a partner to build out this sector in India with us. I want to move now onto talent development. Entrepreneurship is all about entrepreneurs, and Indian talent is really driving the sector globally. Nurturing Indian talent is a theme that we're going to be diving deep into tomorrow, but we'd really love to get your perspectives as investors. Ritu, if we could go to you first. Could you possibly characterize for us what kinds of entrepreneurs that you are seeing entering this space, and whether there may be gaps both in terms of industry experience as well as technical talent?
Thank you, Nicole. I think that's a favorite topic for me. And the short answer is yes, there is a talent gap here. I don't think there's a lack of talent, right? So I'm actually, at this current point, I can tell you that there are 10 super exciting innovations by any global standards that are, transformative, right? That should be investable by all metrics here. But the challenge really is that the talent to commercialize some of these, the talent to kind of take this out of lab-like situations to kind of actually get this into the hands of users is missing. And this is not an app, right? This requires work, right? I think Mark alluded to this earlier. This requires, proof points to be done, which don't happen overnight by a few coding switches, right? And it's super important to keep product and market in focus as you go about this, right? The lab is great, but ultimately you have to show people that you can kind of produce it. And that's where we see a large talent gap. And I think it's a specific type of talent that's missing. I'm very bullish about sort of, we do have science talent in this country. It's science talent that can execute, but it's not the talent that goes towards commercialization. Typically in the West, what I have seen is that there are two types of people. There are people who jump off sort of large companies that then go take this and they come with their experiences there. Or there are people who kind of hover around sort of, technology and tech transfer offices, and, they're serial CEOs, right, that take tech from point A to point B. And, we don't have those two things happening as of yet here. So that middle gap is what I think is limiting the space. And as soon as we see more of it, I think we will, we'll do the ride that Rajiv was talking about.
Yeah, it's really, I guess, about that intersection between technical as well as techno-commercial skill to ensure that we can really grow these enterprises to cause dramatic change in the mass market. Couldn't agree with you more. Starleen, we'll move to you now. Are we seeing a sort of secular influx of talent into the broader climate space? How can we ensure that we're getting the right people to consider these sectors as viable careers?
Yes, we are definitely seeing that there's a secular shift or secular interest in talent shifting into the space. One of the things that we've experienced at Green Artha is a lot of people who are very interested in working in the sector don't really, whether that be climate generally or smart proteins, just don't know where the opportunities are. And that can be a really challenging factor when you're thinking about making a really significant career shift. And we've seen also that a lot of times very technical startups sometimes are reticent about bringing in outsiders for managing the business growth and development. And so, very much as Ritu had pointed out, there is this need for that commercial talent. And I think one of the opportunities that we have as investors is really to help the entrepreneurs that we're working with understand where their talent gaps are and think about how to very responsibly fill them. One of the things that we've been doing at Green Artha to help bridge this talent gap is in partnership with Terra.do. We've created a climate fellowship for mid-career professionals to learn first about climate and climate careers through Terra, and then we help place them with different organizations, startups, investors in the climate space, and so forth. With the idea of really trying to find meaningful opportunities for people to contribute, for organizations to understand how talent sits that they're not necessarily 100% used to can fit. And then a second piece that we're really looking at in terms of the evolution of talent is also just how do we think about getting business leaders across the board to think about developing this talent internally. And I think that is for the alternative proteins side, something that that will come up as a factor when you're thinking about FMCG brands starting to look at entering the space in the future. But yes, we absolutely think that there's a need to bring talent in. We think that there's a need to help build bridges for that talent to be placed well and to support the transition.
Thank you for that. And I think this is a great time to bring on Mark as well, because we've talked about how sort of all the good crop science and life science talent from India tends to gravitate outward towards San Francisco and towards Boston. What should be our game plan for addressing that challenge?
So I think there are a couple pieces to that. I think one is getting people to move back, honestly. A lot of the revolution that occurred in the tech space over the course of the last 20 to 30 years, sure, there were some people that never left India, but lots of people who came back, including many of the venture capitalists that first set up shop in the early 2000s. And so, I think bringing back global life sciences talent is a key priority, because for better or worse, we really do lose a lot of our best to the Boston corridor, to California, and to the UK. It's like what digital was in some ways in the 70s and the 80s, except that hasn't changed. And yes, you can say Kiran Mazumdar Shah, and I can roll my eyes like I have been for the last 15 years, because there has to be more, right? And if you take Ritu, I'm sorry for calling you out on the same company twice, but like Errol worked in the US, right? We see a lot of good entrepreneurs. There are the strongest places to learn how to build life sciences companies are unfortunately still outside of India. I don't think that's true in digital. I don't think that's true in marketplaces. I don't think that's true in platforms or in fintech, but it still is in life sciences. And so I think trying to kind of build a bridge back is critical. But I do think that that we have lots and lots of talented people, and it's a matter of trying to channel the talent that we do have, right, into careers where they can really grow. And there are gaps there, and we need to work on that. The one thing that I hear again and again and again from anything life sciences related in India is that universities have access to basic equipment and reagents and pipettes and other stuff that private companies find it very hard to get. So there's there's a need for facilities that actually kind of work for these companies, for them to take off. And I think we need to start, building earlier and earlier and earlier talent that understands that entrepreneurship is a thing. Right. One of the nice things in digital is that every young computer programmer in India, or every young product manager in India, every young person studying computer science aspires to go into startups now. They don't necessarily aspire to McKinsey, Goldman, and HUL the way they used to. But I don't think that's true in life sciences. I know it's not true in agriculture. And so channeling, right, our incredible amount of domestic talent into, more innovation-based jobs is also a priority. And again, like I said earlier, none of this is going to be easy, but I think this is what's required.
Thanks for that. Vipul, if we could go to you now. CICO runs major programs educating young entrepreneurs, and you're also an organizing partner for us on our India Smart Protein Innovation Challenge this year as well. Mark spoke about how, the need to really educate students about opportunities in entrepreneurship. And entrepreneurship education is difficult. So how can we chart a path towards addressing gaps in terms of sheer numbers as well as in terms of knowledge?
Yep. So, Nicole, if you look at, right, so this is basically most of the startups who are coming is basically a science-led startup, and there are a lot of people who are basically have a deep knowledge about the science side of it, and they are starting a lot of enterprise. But at the same time, one of the pattern we have seen with some of the very early stage, either a student or might be experienced graduate reach out for an early stage in the space where whatever they are building, they are talking, and even they do not have a right background in terms of the consumer, but everyone is trying to create a consumer focused products, right? So they will come and say, okay, I'm creating a new ingredient altogether and I want to launch myself. So in terms of how we can actually guide those kind of the people, instead of like, let's say example, based on their skill set, either whatever they are building is more suitable for, or they are as their skill set perspective, they are good at product development, either they should be going to the B2B market, or might be they should be getting some of the people in the team who understand consumer side of it, because understanding a consumer, it's not going to be happen overnight, and might be so that is a one basically might be you can say the way we might have to navigate some of the early basically a startup or might be a founders who are actually coming to us. That is one thing. Second is basically If you look at it, we are basically based out of IIM Ahmedabad. Most of the students here are basically more on the business side of it. They also have an interest in working in some of the deep tech side of it. At the same time, there are a lot of institutions on the tech side of it where people are coming with this kind of the science-led innovation. We are also basically coming with some of the programs or creating some mechanism where how this basically two different set of talent work together, because they are actually bringing a complementary skill set, right? So the people who are from here, they might not be good at developing this kind of the product from the scratch, but at the same time, the people who are actually have a kind of the scientific background, or they are coming with this kind of the background, they can come up with a deep tech kind of. So and again, this kind of a thing happen in some other sector, right? So the organization like EF of the world, and they are doing great job in terms of bringing founder together, and this will only happen at a very early stage when you are actually building something from the scratch. So that is one of the area we are also working, and we are also creating the program around that. Second is basically in terms of we have seen some of the people who have either even scientific background, technical background. They have a something they have identified through the research, and they already are basically even develop their product, but they don't know more about the business side of it, what kind of business model they should be creating. Even they are not very clear in terms of how to raise or how to basically get the financial resources, raising the funding. So these are the some of the things we have seen it's a lacking in the kind of or set of people who are actually coming in the sector. So might be training on that, right, in terms of how to attract right set of people who can be part of your journey, can bring the financial support on early days. So these are the area required lot of training, and especially for this sector. If we compare with like the people, as Mark has mentioned about the people who are building something in the digital side of it, might be app and all, we have seen that this skill set is already there in the combination of the team they are coming together. So and that's where we believe that I think we might have to put a lot of work around the early ecosystem building, where all in terms of the talent perspective, training side of it, how you can articulate what you are trying to do, it's very important. And that is the area I think as an organization we are more focusing. One of our at a seed level, if you look at our vision, is we are saying we want to be basically largest source of Series A funded startup, and we believe that if we are might be supporting whatever 20-25 companies a year in this space and early, then that will be a 4 or 5 company will go to the might be a next round, and might be other investors who are investing at a pre-series A and Series A can look at those companies.
Thanks for that, Vipul. And I think the work that you're really doing at CICO is so important. And I think Ritu had alluded to this earlier as well about, there being that tech transfer ecosystem that really doesn't exist here. You have your innovators and you have your serial CEOs, Ritu, as you mentioned, but there's really no meeting point for them here. So I think the work that you're really doing at CICO is really what's needed to push this sector forward. Rajiv, I want to go to you now. You're hand-holding a large number of entrepreneurs here, and you're doing it because you're resolved to help us build out this sector. What is the key difference between what you're seeing from some of the entrepreneurs here in terms of how raw they may be? Are there some general characteristics that we should be looking out for? And how do we close these gaps? I think your experience in some of these other sectors could really help, making a comparison to what really needs to happen within the smart protein sector.
Yeah, I mean, I think at starting, I wouldn't say that many of the founders are raw. There are some good founders coming in from business backgrounds. There are many people coming in from the food industry, trying to make a good viable business. What you're not really seeing is those entrepreneurs that have built maybe tech companies, biotech companies at scale. You're not seeing many people coming back from US, Europe, wanting to build companies in India. And you're not seeing professionals who have worked in multinational companies or large FMCGs coming out, typically people who would get backed by VCs or PE funds. You're not seeing many of those guys coming in. I do believe that a lot want to jump into to the sector, but I don't think that the market is yet established. The size of the market is not established. And also, there isn't any risk capital, really. I mean, the kind of capital and all of the funds that are there in this space, many of them are new funds. They don't have a vintage of 8-10 years, so their assets under management are also quite small. So there are a lot of people who can write $500,000, $1 million check, but there are not that many people who can write a 15, 20, $25 million check to the sector. So if you honestly ask me, what are we looking for? I mean, what we're looking for are founders who really understand and who've seen the benefits of strategy, go-to-market, capital efficiency, and people who understand about how to build a great working and viable team. It may be through co-founders or basically by having a good biotech or science-backed people in their team. I think a lot of people are still trying to hold on to the equity because the pie is still quite small. So I think those are the things that many other sector founders have really done. I mean, their go-to-market is very quick. They build companies which are $100 or $200 million in 3-4 years, and now we're seeing $500 million companies come out in 5 years. And I have a bunch of companies I'm working with in 5 years, door to door. They're now $250 to $300 million companies. But when I look at the gap, actually, I'm not sure whether the gap is really at the founders level. I think the gap is really at the funding level. Either you wait for the market to organically grow, which is what everyone's waiting for, or you have large VCs and PE funds who develop a thesis and they back it with huge capital, and they create and accelerate the demand which is there. I mean, if you look at, again, Reliance, there was no polyester market, but they built capacities and then they went out and created the demand. So I think that in many other sectors and in many other countries, you're seeing a huge amount of capital. I mean, you look at Beyond Meat, the capital that it got $40 million in the first year for R&D. So I think India has all the talent. The question is, where's the capital really? So I'm not sure whether it's only the founders, but it's also the access to risk capital that I think is important. And I think if you look at globally also, there's a large participation by CVCs, corporate venture capital arms, that are coming in. In India, we still aren't seeing that, partly because many of the CVCs are participating. For example, Nestle, you look at Givaudan, all of these guys have built out innovation centers outside where they're backing companies. So maybe their plays is that we back companies outside and then we bring them to India. So I think the gap is there, and also the gap is also on a lot of the distribution, cold chain, etc., which really founders need. So if you look at a founder, he's struggling with no capital, not that much of talent, a weak distribution system, no cold chain, no logistics, and no market which is established really. But that's what I believe, that the market will get established in the next 5 years. I mean, we have a young population. We're going to see people eating, consuming just the way people do globally. There's a massive movement to veganism. Instagram, TikTok are going to drive these things. And I think that the market will come in. Maybe not as big as internationally, but much faster than what people think.
Thank you. And I want to stick to that theme, actually. So the summit is really about highlighting challenges and moving forward from conversation to action. And each of you has worked with us to evaluate companies as well as opportunities in the space. And we'd really love to drill down to what gaps you believe still exist. Mark, we'll begin with you. You've mentioned that it still isn't clear how large these categories can get domestically due to uncertainty on consumer behavior. Take us through this open question and how it impacts various categories domestically, what sort of evidence you're looking for as companies begin to go into market, and how this may differ across categories. Mark, you're on mute.
Sorry. So I think today is a really interesting and good day to make this point, because today is the day that NICA went public, right? And we now have a new, female self-made billionaire in India. It's also, I think, yesterday was the day that the Good Glam Group turned into a unicorn. And I bring up both of these companies for one simple reason, because neither has anything to do with food. My point is the following. Nobody has been very successful building innovative food companies in India. Full stop. Fight me on it. Tell me where I'm wrong. Tell me what I'm missing. Okay, what example of a disruptive player in food has been an unqualified success, except food delivery? I will concede food delivery and everything associated with hot, fresh food, because that's what people in India like to eat. Hot, fresh food. right? It's very, 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 very different than what you've seen in the West, where FMCG, CPG disruptors have come in and cleaned house and created, unicorn exits very, very quickly. Tell me where I'm wrong in the FMCG space. What am I overlooking? Because I'll tell you, when I describe mediocre, I will include a bunch of things that you probably think are very successful. Because I actually, and I think Ritu and some of the other VCs here know what the actual returns are, how much money has been pumped into these companies, right, for what are, to be clear, tepid, mediocre top lines. I remember one of the top VCs in India, right, has had more exits under his belt than anyone I know, sitting there saying that food FMCG investing from a startup perspective in India is worse than e-commerce by, right, an incredible multiple, right? That people have pumped $50 million into companies to get to 50 crore sales. And so I don't think that the challenge that we have in alt protein is this challenge of product market fit. I think there is a challenge, forget about alternative protein, in any innovative food trying to reach scale in FMCG markets in India. And I think the fact that when Rajiv says, well, there are challenges with cold chain, yeah, there are huge challenges with cold chain, right? But someone is writing here, IT was also slow at the beginning in India, but now it's, yeah, man, no, okay? IT was bits and bytes and could export without the government realizing it, okay? This is hard. It's really hard. And I think if you ask me, and I've been saying this for a long time, I think there are three big opportunities, okay? I think there's a big opportunity in ingredients, right, that go meet global demand where it's easy. I think there's a big opportunity in the food delivery space to introduce these products to people, right? Maybe in QSR as well. I'm the least bullish on the FMCG category because, again, show me one disruptive FMCG player. Fight me. Come on. Let's do it. Right now, tell me where I'm wrong.
Mark, I agree with you. There's lots of challenges with regards to supply chain, with regards to manufacturing, with regards to distribution, with branding, creating really that market demand within the Indian ecosystem. We agree with you completely. I think what we're really alluding to here is the potential for a sector like this in terms of job creation, in terms of economic growth, climate resilience, food security. And with that, I think I'd like to move quickly to Starleen, and we can go back to you, Mark. But Starleen, we've seen promising early signs with a few public development banks and state climate funds investing in individual companies. But the climate capital space is yet to wake up to smart protein in a big way, really seeing these opportunities that I just described that we believe is really at the thrust for growing interest in this sector. We're going to have a deeper discussion about this on day 3, but would you please frame for us what priorities currently look like in that sphere and what needs to change to consider smart protein more seriously?
Sure. So, I think one thing that sometimes is forgotten across startups, no matter what the sector is like ultimately investors also have to return capital to the people who gave them money. So when we think about what's going to be a viable investment, there needs to be both this idea that there's a significant market opportunity that can be addressed, and also a line of sight to the idea that this particular company is going to be able to capture that. When we think about that in terms of like what's happening, in India generally, yes, there's huge revenue compression anywhere in the food ecosystem. And I don't think it matters if you're thinking about FMCG or the various commodities or anything. Like food is cheap in India compared to the rest of the world, which means that there's not as much in terms of margins that are available. But India generally has, the businesses that have done well by saying we're going to take small margins in quantity. And so, one of the things that we looked at at very much when we think about investing into any sector is really, what is going to be that tipping point that makes a company get to commercialization? What is the tipping point that is going to help consumers adopt this? And there are positive factors for smart proteins, right? If when it comes down to it, the barrier to entry, it may be high, but there's a low barrier to adoption, right? I can go try a Beyond Burger, an Incredible Burger. I can do a taste test for them both on the same day, and like the cost is no more than what I would otherwise experience. And so, at the point that companies are ready to compete at that level, I think there is an opportunity. I think there really is a significant need, as Ritu was talking about, however, around thinking around commercialization and thinking about what is the business model that can make this viable very early on, because a lot of times the way we design a product, if we're doing it without thought around what is the business model that's going to be commercializable, we end up with a product that is much harder to get to market. And so, I think that is one area where I would strongly encourage the startups operating in the space to really be thinking about very early in terms of their product development cycle.
Thank you. And with that, Ritu, one of the classics that we've repeatedly discussed is that there are sort of multiple valleys of death for deep technology companies, especially those and including those in smart protein, particularly in India. And we've said this multiple times on this panel as well, where capital is really not patient or abundant. Many smart protein companies, including String Bio, are going now from lab or pilot scale to market and industrial scale up as we speak. So how are you seeing this evolving? What are the challenges that you are seeing?
So, Nicole, can I divide this into two? Because I do, there is something I want to sort of, there are two types of things that get thrown in the same bucket as smart protein here, right? One is an FMCG company, and majority of the FMCG companies in India, actually the technical piece stuff behind it is not really disruptive. Let's put it this way, right? It is, it's low barriers to entry of sort of what you can do. And I couldn't agree more than with Mark that India is an absolutely tough market for building FMCG brands. Forget from a VC perspective, I work for a company, and large companies, which you think are very big brand names, go look up their top lines in each category, right? And you will be shocked and surprised for the size of India's market as to what those are. I can tell you Philippines beats us hands down in top numbers for some of these things, right? So I think those are super tough. Right. So if you say that this is a trend in India, I disagree, because the market is just not really large enough. If somebody buys a packet once to sort of try it, that's what you get basically at the end of it. Right. So those companies to me are plain vanilla FMCG companies. And, maybe some will go, some will become groups of brands or whatever, like we're having the Thrasio style stuff happen, which perhaps in my mind has more potential. So I will put those in a different bucket, and those guys are going to go down the branding route, and if the market is sort of large enough. The other bucket of smart protein, and that's food formulation, that is the bucket that I would put that into. I'm not saying that there's nothing to do there. There's a whole bunch of stuff. If you don't get the taste, texture, all of those things right, it's not going to work, right? We don't want to eat all this stuff that we don't like. And that's true of all of us. The second bucket of the thing is where you're talking about a much deeper innovation, right? So if, Starlene spoke about Impossible Foods, underlying the Impossible Foods, though they're building a brand in the market and, they're working towards price points of the average burger, there is a hell of a lot of science of how that heme protein works and how that piece happens. Those kind of companies in India, and I'm going to leave alone the branding aspect of it. That's a strategic decision as to whether you're branding or whether you're an ingredient player or whether you're a, industrial player, or how you kind of manage that strategy. Those are different strategies that different people can kind of adopt. Those actually, in the last 3 years, I would say, Nicole, I have seen the valley of death move, right? So you would have said initially that there aren't enough seed, there isn't enough, hats off to DBT and Biorac. They've actually done a pretty amazing job to provide world-class facilities for people to come in and incubate them and support them through that whole lab stage. And I can tell you they do an absolutely amazing job, and I've been in enough labs around the world. Yeah. There are also funders now that will take the 1-2 million kind of bets, right? So let's not forget, India actually has a hell of a lot of manufacturing. Pharma has been in core, whether or not we're making the molecules or discovering the molecules, we are making the molecules, right? So there's a hell of a lot of people there who understand a lot of this. There is a hell of a lot of, other people who've done industrialization who do understand these. They've made their money. And in the last year and a half, I have been amazed at the number of family offices that are willing to put in a couple of $1 million into these kind of ventures, essentially, right? So that gap has sort of also moved. I agree with Rajiv, the financial investor is not there yet, smaller pools of capital. That'll take time. There's another opportunity sitting in India right now. Why go here? Let's start there. But for families, it's a great thing, right? For companies, it's a great thing. They're also at a position to evaluate this, right? Which a lot of financial investors are not, right? Because if you're talking about deep tech, I need to figure out if you really have deep tech. There's a huge information asymmetry in what you're hawking to me, right? So and it's not like you have 50 customers there, right? Basically, so you have to manage that risk somehow, and people have to have that right? Now the gap comes in at the next level here. There are also PE type investors who've done this kind of stuff, maybe invested in APIs or something before, who say, look, you're de-risked past your technology, but I see revenue, I see your customers, I'm going to evaluate as a business, I'm going to evaluate the growth, I'm going to evaluate the market, your strategy, blah, blah, blah. I know how to do that, right? But you need those revenues, right? And you need some chunk of revenue. So you can't say I have $5. You need 10 million, you need 50 million. This is the kind of revenue that you need, right? Now, from you having actually proven that your technology is commercially makes sense, right? Because scaling up of a technology from lab to production scale is not a simple job. That requires capital. It requires you setting up pilot plants. It requires any company putting in equity alongside any partner if you're going to get into JVs, etc. So we need that $20-30 million pools of capital where it's not the market is not 100% de-risked. The full commercial scale production is not de-risked. And that capital is the valley of death right now, in my mind, in India. We don't have the tsunami right now to have the millions of the early pieces right now, right? We need as we discussed earlier, we need the entrepreneurs also coming down this route to kind of happen, right? But for the number of entrepreneurs there is capital out there. There are different pools and pockets of capital that are out there. But once you get beyond a certain stage and you've got the strategy, you've got everything right, you still need that capital. And that capital, industrial houses are not willing to put $20 million. Then they want it captive, right? Then you're talking about a very different business. I think it was Rajiv, or you alluded to the fact that, the Givaudan's of the world, et cetera, are all funding this. Yeah, they're all funding this, but nobody's funding it in India because there's a risk that they all see that they're not willing to take, right? Which they don't see in the other markets. And that's the valley of death right now in India, in my opinion.
Thanks for that, Ritu. I think you brought up this really interesting point specifically about some of these strategic partnerships with existing industry that can really support new product development as well as scale up of infrastructure. And I think that's an issue that we're seeing globally as well, to really see this market scale beyond beyond the levels that it currently is at. Vipul, we'll bring you in here. We've worked on a report on the cultivated meat industry that we will be releasing later this month, specifically pinpointing some of these components that are really required to build out this thriving ecosystem for cultivated meat in India. Building on, of course, CICO's experiences in other areas as well. Could you speak a little bit more to these needs across capital, across manufacturing, across regulatory, across talent?
So as Ritu has mentioned, right, if in terms of the infrastructure perspective, yes, I think BIRAC and other government organization has done the fantastic work creating basically a large infrastructure. But at the same time, if you look at the experimental capital, right, so even might be there is a capital is flowing across the sectors, but specifically this kind of the tough sector, and even the whatever the product or whatever the startup is building, definitely they might have their own value proposition, USP, but ultimately capital is going to be a moat, right? And if you talk about the early stage experimental capital, where startup have certain assumption on their product level or might be at their early business level, and they want to validate this assumption, and that's why they require this experimental capital. And if you look at ticket size perspective, today might be whatever the early experimental capital is coming in the form of 50 lakhs, 1 crore or like 2 crore, right? But I think this is the capital is not good enough for some of the deep tech or this kind of the science-led innovation. Even we have seen that the companies might be take a year long time to even gather 2 or 3 might be angel investor or some family offices to put the together and the like finalize the round, right? So definitely we feel that uh, I think this sector required a lot of dry powder for a early experiment. I think might be in terms of financial resources, we have to give them enough capital so they can actually done their experiment very quickly, accelerate their growth, and that's where I think we will be able to see more and more might be a success is coming out from the India. But whatever the capital is flowing might for the experimental side of it, it's not might be going in this kind of the top sector. If you look at today, there are basically companies where building the marketplace and all might be even raising this like a bunch of money at a basically even a paper plan or might be even in their early MVP. But if you talk about this sector, we have seen some of the companies where they are doing fantastic work, might be, but at the same time their growth is slow sometime because of the even this early capital or might be this experimental capital is not available. If this capital is flowing, then definitely we'll be able to utilize this whole infrastructure which is created by BIREC and the government system, DBT and all, right? We can utilize those infrastructure very well, and might be we can accelerate the growth of these early stage companies.
Thanks, Vipul. And before we close off, Rajiv, it would be great if you can round this all out for us. You've dived deep into supporting a number of entrepreneurs really identify and access some of these opportunities in India. Could you speak to some of your learnings from your work, and particularly what gaps you see and what's making you optimistic?
Yeah, well, I think we've discussed a lot. I think there are challenges, to be honest, which I talked about, which is distribution, cold chain, etc. I think the real opportunity in India, and I think there's a lot of focus on building consumer brands. I think everyone's trying to build a Beyond Meat, and this is a conversation that Varun and me were having. And I was asking why are we trying to look for the next Beyond Meat and the next Imagine or whatever it is. I mean, India has another big opportunity. And if you look at India from a indigenous crop point of view, India is the largest producer for chickpeas, we're the largest producer for tuer dal, we're the largest producer for moong dal, urad, lentils. So why are we not thinking about that as a strength? Why are we not thinking about, extruders, for example? The worst case estimate talks about around $11 billion required for extrusion capacities, and this is with 11% adoption by 2030. Why are we not thinking about that? Why are we not thinking about India being the base for bioreactors? Today, cultivated meat is going to require around 30 million tons of bioreactor capacity, and that's a capex of around $30 billion over the next couple of years. We already have some bioreactors in Bangalore, which are part of a German company. They've set up their shop over here, and we're seeing some pharmaceutical companies already creating capacities in joint venture for many of these global players in fermentation, etc. So we already have the pharma capabilities, the life science capabilities, and if people can make pharma grade stuff, I'm sure they can do it for food grade stuff. It's a step down. So why not think about the opportunity from a slightly different point of view and say, hey, let's try to become like either the bioreactor kind of infrastructure play. Why not become an ingredient play? So I'd like to sum it up saying that I see 3 opportunities. One is the pure play FMCG play where you build brands. I totally agree. If you look at all the companies, I myself have in my portfolio 1 or 2 companies, very difficult to get revenues. Persistency is not there, unlike the US. Eating patterns are very different. So FMCG is a tough play. Plus, you need a lot of money to develop the category, to get people to adopt challenges. There's a second play, which is a platform play, which is infrastructure. You become the extrusion capacity, you manufacture, you maybe export, and you have extrusion capabilities because there's a shortage of that. And then the third one is a technology play where you use your indigenous crops as a background, and you create IPs, and then you outsource the IPs, to global players, So that's the way I like to sum it up. So yeah, I am bullish, but I think in a slightly different way.
Thank you all so much, and that's all we have time for. But thank you all so much for being part of this session. Thank you for bringing that energy. Thank you for bringing your views. And we look forward to partnering with you moving forward. Thank you all.
Thank you.
Thanks, everyone. See
Thanks,
you.
Nicole. Thank you.
Bye.
Thanks, everyone.